Can artificial intelligence actually help with investing, or is it mostly hype? Instead of guessing, I tested ChatGPT's stock ideas over a fixed period using real market data. Cherry picking, no edits. Every trade tracked. Here's what actually happened. Before looking at results, it's important to set clear rules. This wasn't about predicting the market. It was about testing how AI behaves when asked for stock ideas under simple, repeatable conditions. The rules were straightforward. First, stocks were selected using the same prompt format each time. Second, performance was tracked daily. Third, results were compared to the S&P 500 as a benchmark. And fourth, no changes were made once the test began. ChatGPT was not given live market access. Instead, it was asked to suggest stocks based on general market conditions, company fundamentals, and basic risk considerations. This reflects how most people actually use AI today. The goal wasn't perfection. The goal was consistency. It's the same structure, the same rules, every time. The AI selected a small group of large-cap stocks. These weren't obscure names. They were liquid, well-known companies with enough data to evaluate fairly. That matters because most investors aren't trading microcaps or thinly traded stocks. They're operating in this same universe. Over the 30-day period, results were mixed. Some positions outperformed the S&P 500, others underperformed. Overall, performance stayed close to the benchmark. AI did not consistently beat the market, but it also didn't collapse, and that's important. Returns weren't the most interesting part of this test. What stood out was how AI approached risk. It avoided extreme positions. It leaned toward diversification, and it reacted logically, not emotionally. AI wasn't trying to be brilliant. It was trying to be stable. And that tells us something important about how AI actually works in investing. This test highlights 3 key takeaways. First, AI is not a stock-picking machine. Second, AI works best as a decision support tool, not a decision maker. And third, consistency matters more than prediction. AI doesn't replace investors, but it can help filter noise, manage risk, and enforce discipline. Future tests will look at different strategies, different tools, and different market conditions. Subscribe to AI Finance to see how AI actually performs when tested with real data.